Hello, welcome to Blythe Business News. Today we're talking about Union Jack Oil. Union Jack Oil operates in the UK, in the East Midlands, listed on AIM, a market capitalisation of around £21 million sterling, a symbol of UJO. And today to talk about Union Jack, I'm joined by David Mirzai. David, who's Head of Energy Research at SP Angel. David, welcome back on the show. Now,
Thank
you
you.
are the company's broker, so you're going to know Union Jack very, very well. A couple of
Indeed.
weeks ago, they made a significant announcement, I think, um, looking at a competent person's report, increasing the reserves. Just give us your overview of that announcement and what it means. Well, just start there. Give us an overview of the announcement.
Of course, Tim. Well, at the start of January, Union Jack announced a material upgrade to reserves on its flagship onshore UK Wrestle field, in which it has a 40% working interest. Now, an independent competent persons report, or CPR, estimated a more than 250% boost to the 2P reserves on that field. Now, this was made up of a 60% increase in volumes from the currently producing Ashover Grit formation, as well as an upgrade of contingent resources to reserves in the Penistone Flags formation, which is based on an approved development plan, which will move forward over the next couple of years. Now, Union Jack subsequently announced that the Wrestle field has now passed the $18 million milestone for revenues generated net to the company since its startup, and continues to generate free cash flow from current production of over 660 barrels a day.
So, putting that together, and in simple terms for a simple soul like me, what does that mean for Union Jack's future as a producer? And is there scope for even further growth?
Yeah, so the first thing to point out to investors is that there's plenty left in the tank at Wrestle. You've only produced about 20% of the reserves on the field. You've got over 80% of those reserves, those 2P reserves, still to produce. The JV, in terms of getting after that production, you have the existing well, which is back in production, but the JV has also submitted and gained NSTA consent for a Penistone Flags development plan. So that's the undeveloped part of the reservoir, and that involves the drilling of 2 infill wells. Now, this will include the production and monetization of gas volumes, which have previously not been monetized, but those will be exported via pipeline to the UK grid. Now, we expect local and environmental approvals to be received over the summer. That could lead to drilling later in the year, and that would allow for further production and cash flow growth in 2025 for Union Jack and its partners.
Just pick up on that cash flow growth. So, what are the financial implications of all of this for Union Jack and for its shareholders?
Yeah, I think investors should take 2 things away from these 2 RNS statements that have come out. The first is that the Wrestle field is expected to continue generating positive cash flow over the coming years. You know, this is not just the end of the line for the Wrestle 1 well. We will expect that well to continue producing cash flow, and then as the field is developed, that will further boost the cash flow and the significant cash resources that the company has in its balance sheet. I think the company estimated short-term receivables, cash, and investments of £9.45 million. That's almost half of its market value, and on the balance sheet as of last week. Now, the other thing to bear in mind is the company remains fully funded for all of its planned operational, G&A, and capex costs, and it has additional flexibility to invest in new opportunities where it sees fit. Now, the other thing I want investors to be aware of is that management has returned £3 million to shareholders via dividends and share buybacks in the last 14 months. We would expect these shareholder returns to continue this year as the management are fully aligned with shareholders, being large shareholders in the company itself.
So, okay, I think I know the answer to this question, but how do you see the future, therefore, for Union Jack?
Well, certainly for investors, it's good to look at Wrestle as a cash flow provider. It's good to see further production on the horizon for the Wrestle field. But we also want to see further portfolio growth. We want to see the company broaden its portfolio and lessen the risk that it has on one producing asset. Now, with that, we think an increase in drilling and development activity across the portfolio should provide investors with the greatest potential for value growth in the next 12 months. And we certainly expect to see that uptick. I mean, for example, on West Newton, the joint venture plans a horizontal appraisal well by June this year to confirm commercial flow rates on that undeveloped discovery. On success, what you would do is you'd materially de-risk the project, and you'd potentially provide a monetization option via early production from that well. The company also plans to drill a sidetrack well on an infill drilling opportunity on the Keddington field, for which planning consent is already in place. And we look to see the company give us further updates on all of its drilling activity, subject to rig availability and approvals and such else.
So lots of news flow coming up, great financial performance ahead, we hope. Let's just end by taking a little bit of a step back from Union Jack. You know, as viewers may know, there's been a bit of a resurgence in the UK mining industry, you know, driven in the southwest with people like Cornish Metals and Tungsten West and others. Do you think there's a possibility here of a resurgence in the UK oil and gas industry onshore in the East Midlands, say, where there seem to be a lot of companies or a bunch of companies operating that same patch of the East Midlands? What's the chance of a resurgence in onshore oil and gas in the UK?
Well, that would certainly be nice to see by the industry, especially the onshore industry. The East Midlands has got a very long history, amounting to several decades of oil production from this area. And they would like to see clearly new drilling technologies, new opportunities being taken advantage of. But I think the key difference between the two is clearly on government support and policy, Tim. The introduction of the Energy Profits Levy in 2022 has made the UK more challenging for investment, as we've heard from the likes of Harbour and the rest of the oil industry. Whilst we would expect onshore UK to remain the prime driver for Union Jack, given its portfolio, the company did admit last year that progress in unlocking the value of its portfolio has been slow. So it had been forced to look at other opportunities to grow that value quicker than it would be allowed to onshore the UK. Now, this contributed to the company deciding to acquire financial interest in a fellow AIM explorer and developer called Beacon Energy. And that provides Union Jack investors with a certain amount of exposure to a production growth opportunity in onshore Germany without actually having the costs associated with running that asset themselves, of which there would be many. And that would be too much, we would imagine, for the G&A to bear, and no need for it in any event. What we've also seen is Union Jack's partner on the Wrestle field, Europa Oil and Gas. They recently farmed into an exploration opportunity in West Africa, which they said provided a better risk-reward profile than opportunities in the UK. And of course, the largest UK independent producer, Harbour Energy, is trying to put through a merger with Wintershall Dea. And what that would do would be to more than double its portfolio production, but it would introduce it to new countries such as Norway and North Africa, as well as internationally. Now, whilst we wouldn't want to rule out the UK, there's still plenty of opportunity there, and the Energy Profits Levy in itself provides great impetus and great encouragement to invest in new assets, because by investing in new assets, you get to write off over 94p in a pound against your taxes. We do think that Union Jack will look to its advisors to bring forward new opportunities which it can consider in that light. So I think we'll see what policies emerge out of the UK general election first, before we take a call on whether the East Midlands will drive the oil industry as Cornwall is likely to do the mining industry.
Okay, thank you for that. But what I take away is Union Jack well placed in the East Midlands and already active in Europe, in mainland Europe.
Well placed and well funded,
yeah.
Indeed.
Yeah. David, thank you for joining us. That was David Mirzai, the head of energy research at SP Angel, and we've been chatting about the prospects and the development at Union Jack Oil in the East Midlands. As I said at the top of the show, a Union Jack listed on AIM, a symbol of UJO. That's it for this edition of Blythe Ray Business News. Thanks for watching.